Hey, this is Sasha. Thanks for joining me in today's video. And what I want to share with you today is the number one thing that most people miss when they're looking at charts or evaluating stocks by the technicals. So stay tuned. I'll share with you some insight in this video. All right, so one of the reasons we're looking into this and looking into the technicals is because we have a new course that's launching, or actually has already launched by the time you're watching this video. It is called Technical Analysis for Options Traders. So if you haven't started with options and you haven't looked into trading options, take a look at it. We have a lot of other beginner courses like the Mastery series from the Foundation, and you can just get started. A lot of good training. Even that one's 11 hours long. But this one, it's already launched by the time you're watching this video, and you can get a discount on it. When you click it, there'll be a discount. It'll take you to our Rise, the number 2 Learn website. And you can get, say, $50 off on the technical analysis course here. So this course is packed with quite a lot of information. So we look at breaking down your portfolio, a lot of different indicators, a few thoughts as you start using technicals in your trading, different charting platforms, moving averages, a wide price spread, basics to understanding Bollinger Bands. We look at RSI, average true range, how to apply these things. And then as we look at it, how do we evaluate these portfolios, looking at your portfolio in different stocks by the technicals, kind of like how much emphasis do we give the technicals and how do we change our position. So we're really honing in a lot on the technical videos this month because of this course. So check that out. Go to our website, tradersfly.com. You can pick it up, click the link. There's a lot of other great stuff there for courses if you're getting started, brand new, or even more advanced. Now, one of the reasons why we're looking at this and what do most people miss when it comes to the technical side of things is really when you look at fundamentals and technicals, remember that fundamentals are very, very similar to technicals. Usually stocks with great fundamentals have great charts, and stocks with great charts have great fundamentals. However, when you're looking at fundamentals, let's say you get a report that's 50 pages long and you've got all these earnings to go through, all these reports to go through, you kind of know how far you went to digest the information. When it comes to the technicals, it's a little bit different because as you look at the charts are kind of never ending. So things can get a little bit distorted in that. So let me share with you an insight here and a small little concept and kind of this first point. And that way maybe it'll open up your mind a little bit more about what most people miss when it comes to the technical side of trading. So let's take a look at this first point. If you're looking at, let's say, a chess game, right? And we're looking and evaluating a chess game. And I'm looking at it from this perspective. Now, can I really understand what's going on in this game? And you might say, well, no, because I'm missing a lot of the data. I'm missing where are the chess pieces positioned. I'm not seeing the overview of the board from the top. Why is it that when you play a chess game, and if you recall the good old days of Yahoo Chess, why is it that when you play a chess game, you get to see the full board? You don't even see it from this perspective, really. A lot of times when you're looking at a chess game, and we go ahead and look at, the Yahoo classic games back in the day, you always see it from the top side. You see it kind of like this. Now, why is that? Because you want to see the full board, right? You want to see the bigger picture. Now, why is it that we don't do that in the stock market world? Why is it that we hone in and zoom in and maybe just focus in on a little segment or a little part of the board? Like, let's say I take this board right here, maybe open it up. Let's see if I can. Open image, maybe not. Okay, let's see. Zoom in, and why is it that we don't see just this little area? And that's the thing, is this is what people are doing in the stock market world. They're seeing this whole part of the board, but they're not seeing the other part. And this is what I want to show you right here. This is how this works. So when you look at a stock chart, what people do is we have time frames. We have kind of a daily, 2-day, weekly, monthly, quarterly, yearly, 5-minute, 15-minute. And this is where it gets a little more confusing because we're dealing with time, and time is it's almost infinite from our past to our future. You have this time frame concept, and this is really where the whole confusion lies within stock charts. And for us as a trader, we need to just concentrate on a certain specific time for today, for the next week, for the next month. We're looking at it from our perspective, from right now, moving forward, what's going to happen. Now we use history as a way to guide and measure moving forward. but we're really looking at kind of what's important for us in the current time frame. So we're really taking our glasses and we're focused in on that zone. And this is where the problem lies, is that too many people, I find, they get into this 5-minute, 10-minute, 15-minute mark, and they try to make their trading decisions based on these kind of time frames. And they say, hey, I'm going to go in right here, and this looks good, you know, but then all of a sudden that stock starts selling off a few days later. And that becomes a huge issue and problem because they're really looking in at seeing the trees, but they don't see the forest. They're zooming in at a certain specific point in time like this, but this time frame is a 15-minute. And if you go into the daily, oh, well, the daily is actually a downward movement. So if you look at the daily, we're actually moving down. And maybe that bar looked good, but overall you're moving down. Let's go into, let's say, the weekly. The weekly, oh, the weekly doesn't look very good either. So imagine that. You're looking at it from a certain single point of view, and that's the problem. A lot of traders, when they go in and they look at charts, not that I think you need to look at charts 90% of the time. In fact, I think it's the opposite. Look at charts a very small amount of time and focus on your position much more. And I'm trying to emphasize that more recently because I think too many people get too far into the charts. But when you go ahead and look at these charts, you know, you got to look at them from multiple perspectives. Here's a 3 time frame view that I like to look at. If I'm looking at things, I've got one time frame. This is the monthly, this is the weekly, and this is maybe the daily. Now, will I maybe go into the 30-minute? Yeah, maybe. If I want to go ahead and let's say I draw a line or perspective, like let's say we go ahead and we draw a technical line, like in this case, I might draw support or resistance, and you can see right there, I've got a line right here on my monthly. That way I understand the bigger picture. That way I understand, here's my weekly line, it's the same line. My medium term picture, and how do I make my trade decisions if I want to go ahead and enter that trade? Well, you can see now, oh, it's not really clearing the bigger picture yet. That's my 30-minute time frame. And if it's not clearing that, and you can see you've got resistance on the bigger time frames, well, why would you go in it? Why would you go into the trade? And that's what people do, is they go into these trades right here early, right here, because they think that this is a good breakout point. They think this is going to work well, when in fact you've got maybe resistance right up ahead if you were to look at maybe the weekly and the monthly time frame. Now you're going to probably say, hey, well, I'm a day trader, I don't really need to worry about the weekly or the monthly. Well, wouldn't it be nice to also have other things moving in your favor? It's kind of like, hey, I got gas in my car and I'm driving 1,000 miles and I got a full tank of gas. I'm not worried about the snowstorm or the winter storm and the wind that's coming right at me at 50 miles an hour. Yeah, maybe you'd make it. But wouldn't it be nice if you had a little bit of a cloudy day or even slightly sunny to drive through? You didn't have the rain in your face to slow you down. You know, it just would be a little nicer. So in the same way here, wouldn't it be a little bit nicer, even though maybe that is your breakout point, wouldn't it also be nicer if you had also the weekly and the monthly people, the people that are trading longer term, also moving in your favor? Yeah, absolutely. Because you'd have more people on your side, meaning more fuel would come into the stock and make the move to your direction a lot easier. And that's where I think many people go wrong with charts, is they hone in and they focus maybe on this single time frame. They look at maybe their 30-minute, their 10-minute, their 15-minute, whatever one they think is better, which not necessarily one is better than the other. It's just that they look at that one because they think it's the most important, and they don't combine it with the bigger picture, okay? And there is where you're missing seeing the forest, seeing the bigger picture, zooming out of the world and seeing the whole picture, when in fact you're just zoomed in into your world of seeing just a few of the trees or even the bark or just the leaves, and you're not seeing the whole perspective. So that's what I want you to go ahead and challenge you to go ahead and look at multiple time frames. The monthly, you know, the weekly, the daily. Start with maybe 3. You could look at quarterly as well if you want to do that, or even yearly. So time frames, they're very important. And if you can get more things in your favor to push that stock in your favor, it just makes that run a lot easier, and it'll help fuel the stock in your direction. All right, so anyways, I hope you found that video helpful, insightful, gave you some things to think about, maybe to challenge you to look at those time frames. And if you did, great. feel free to subscribe if you're brand new, and that way you can see some other great tips, ideas, and insights. And if you want to check out some of those freebies that I mentioned earlier, then grab some of them by clicking the link right here. Thanks again, and I will see you in the next video.